This show is produced by the Hartman Media Company. For more information and links to all our great podcasts, visit hartmanmedia.com.
I'll tell everybody this. Your advice for entry-level investors is phenomenal. Don't change a thing about that. That works 100% for the entry-level, the small investor. Your advice for those people is the best I've seen out there. I mean, just don't change anything about it. You're spot on with your listeners.
Welcome to the Creating Wealth Show with Jason Hartman. You're about to learn a new slant on investing, some exciting techniques, and fresh new approaches to the world's most historically proven asset class that will enable you to create more wealth and freedom than you ever thought possible. Jason is a genuine self-made multimillionaire who's actually been there and done it. He's a successful investor, lender, developer, and entrepreneur who's owned properties in 11 states, had hundreds of tenants, and been involved in thousands of real estate transactions. This program will help you follow in Jason's footsteps on the road to your financial independence day. You really can do it. And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Greetings, empowered investors, and welcome to episode 2274. Good day from Medellin, Colombia, as I continue my South America tour. More to come. I'm flying to a new destination today, and of course, circling back home in the very near future because I'm going to see you at Empowered Investor Live. In fact, our guest today will be speaking at Empowered Investor Live, and that is none other than famous CPA and Rich Dad advisor Tom Wheelwright. This guy has all sorts of genius tax strategies. You know, taxes are the single largest expense any of us have in our lives. And if we can save on taxes, we can create wealth so much more quickly. So Tom Wheelwright will be with us in just a moment, but be sure you do register for Empowered Investor Live because we have a bunch of other great speakers as well. Our 2.5-day event in Irvine, California. It is going to be our best yet, our 26th event like this. And we have some other great keynote speakers. Sharon Lechter is speaking again. She has spoken at our events before, and she will be back with us this time with a keynote presentation. She's the author of so many great books. They're really, really good. And by the way, one of them that is a sleeper, I think, at least for me it was, a really big, pleasant surprise, was Outwitting the Devil. Make sure you read that book by Sharon Lechter. It's just so good. But of course, the Cash Flow Quadrant in the Rich Dad series and so many others are so good. She is just a wonderful lady and a great speaker and a great educator. We'll also have, for the first time, Mike Maloney. He is the expert, probably the best teacher in the world on monetary policy. And of course, we are big on inflation and using that to our benefit as real estate investors. And so Mike Maloney will be talking all about how the system works, sort of the underbelly of the financial system and monetary policy. Just incredibly important stuff. And then we've got a whole bunch of other speakers. Our teams will be there, our property managers, our local market specialists, our software providers. I'm really glad to say that this time we'll be doing a lot more on software and technology that can really help you with your real estate portfolio and make you a better investor and also make it a lot easier for you. So empoweredinvestorlive.com is that domain name to go and get your tickets today. Also, by popular request, we have children's tickets. In fact, not really children, but it goes up to age 21, special discounted tickets for your kids. You want to bring your young adults or your children. We have had some of our investor attendees in the past bring kids as young as 11 years old, and they loved the event. So it's a really fun event, but it's a super educational event. And the sooner you can expose your children to this kind of knowledge and this kind of thinking, the better off their life will be. So bring them. Special prices at empoweredinvestorlive.com. And also, I got one more big surprise. We have agreed with George Gammon to do a deal where if you buy an Empowered Investor Live ticket, you also get a free ticket for Rebel Capitalist Live, which is about a month later. So that event is a month later. It's in Orlando, Florida. I have spoken at all of the Rebel Capitalist events, and with your ticket purchase, you get one ticket for that event as well. So it's a double whammy, double knowledge, double trouble, all kinds of great speakers at both events. So make sure you get your tickets today, empoweredinvestorlive.com. And without further ado, let's get to Tom Wheelwright. And before we go, let's hear an interesting clip of the day.
How many children or people are totally unvaccinated? Is that where do you find? Is it just the parents that stepped up and said? I would think that's a very small percentage because so many of us blindly followed, the recommendations to vaccinate children.
Yeah, it's less than 1% of the public. So the Amish are a perfect example of a large group of people who are largely unvaccinated. And there's we can't find an autistic kid who was unvaccinated. It's very, very rare. In the Amish community, very, very rare. You won't find kids with ADD, with autoimmune disease, with PANS, with epilepsy. You just don't find any of these chronic diseases in the Amish. And the U.S. government has been studying the Amish for decades, but there's never been a report out to the public. The reason, of course, is it would show that, if you don't follow our guidelines, you're going to end up healthier. That's why there's no report. After decades of studying the Amish, there's no report, because the report would be devastating to the narrative. It would show that the CDC has been harming the public for decades and saying nothing and burying all the data.
It is my pleasure to welcome a returning guest back to the show, and that is the famous rock star CPA, Tom Wheelwright. He's always got great insights. He's one of the Rich Dad authors, and great insights on taxation and the economy and really creative strategies. So there's a lot going on right now. Tom, welcome back.
Thanks, Jason. Always good to be with you and your listeners. There is an enormous amount going on.
Yeah.
And I think there's a lot of chatter. And I think that we can pick apart some of that chatter for people, because I don't think it's what you necessarily hear.
Absolutely. So, the new Trump administration, Trump 2.0, which I think is a much better Trump than Trump 1.0. I'm really impressed with some of the stuff he's doing. I don't think it'll be without a few bumps in the road, though, for sure. There's some massive changes. He's a disruptor. And one of the things he said, Tom, is he wants to eliminate the IRS. He wants to eliminate income tax and really get money from the new ERS, the External Revenue Service, rather than the Internal Revenue Service. Speak to us about this.
Well, so first of all, he's Andrew Jackson 2.0, right?
Mm-hmm.
So that was Andrew Jackson's philosophy. The challenge with the income tax is that if you eliminate it, it'll come back. Unless you actually eliminate the 16th Amendment, he'll eliminate it, and the next president will bring it back, and it'll be back. And so what we'll have is we'll just have more taxes. And so that's actually the issue with saying, hey, we're going to take the tax rate down to zero, or even like a flat tax. Reagan did a flat tax, and where are we now? Right. So I'm a huge fan of eliminating the 16th Amendment, but you got to do it by the voters have to approve that. Right. So you got to get Congress and the voters on board. You can't do it without it.
Right. To really eliminate it permanently, it would require a constitutional convention.
That's what I'm saying. You'd have to eliminate the 16th Amendment.
And that is major. I mean, that is a high bar, to change that.
Yep.
So I agree with you. But what could he do? Just take the tax rate down to zero rather than constitutionally eliminating income tax, just lower the rate, right? I mean, talk to us about how this might play out.
Well, so first of all, you got to have revenue somewhere, right? So where's the revenue going to come from? And the idea that it's all going to come from tariffs is fairy tale.
I agree, because there's not
going to
enough.
Happen. It's not enough. And, there's static scoring and dynamic scoring. It's important for people to understand the difference.
What's that mean? Yeah.
Static scoring means that when you're saying, well, this provision brings in this much money, or this provision costs this much money, it's based on nobody changes their behavior.
Oh, right.
Right. And dynamic scoring says, hey, wait a minute, which is a scoring like Tax Foundation recommends. Dynamics oriented says, well, hey, you got to look at the behavior changes. So for example, you could say, well, from a static scoring, you put 100% tariffs on everything. Yeah, but you throw us into a depression. You know, people don't have money to pay those tariffs because yes, some of it is paid by the vendors, but a lot of it's frankly paid by the consumers.
Right.
Okay. And so, and really all you're doing is shifting the tax to, you know, we just have a different kind of tax. It's more of a sales tax, right? A tariff is more like a sales tax.
Well, by the way, just to interject there, you know, that's the other source of revenue is not just the tariffs on the goods being imported, but a national sales tax on every good, whether it's imported or not.
Frankly, a better regime would be a value-added tax than a national sales tax.
So the VAT tax like they have in Europe.
Right. Like, well, they have, every country has a VAT except for the United States. Okay. Let's be clear. I believe it puts us at a severe disadvantage because our economy is so big. We have a trade deficit, which means we import more than we export. If we import and exported the same amount, a VAT would be meaningless in trade. But because we are net importers, we actually have this big trade imbalance, which means that, let's say Boeing sends a plane to France, and then Air France sends a plane to the US. France, they're paying 22% on Boeing, but there's no value-added tax on the export from Air France. So what that means is that the plane that Boeing ships is 22% more expensive, okay, in France than it is in the U.S., and the plane that we import is the same here as it would as Boeing. So I think that a value-added tax actually is a better regime. Plus, it means that the average business doesn't have to deal with it so much. The value-add tax, I think, is not a bad idea. The problem is, okay, we put national sales tax, value-added tax, great for the next 4 years, and then what happens is it's baked into the system. Yeah. So now what you have is along comes, I don't know, Newsom, right?
Well, let's not have that happen. Let's have
whoever it is. Okay. Sorry to use a bad word, but whoever it is that comes in says, hey, we need more revenue. We'll just increase that income tax rate, or we'll increase the sales tax rate, or we'll do both. Now, all of a sudden you're France, right? Because France has high income tax and a 22% value added tax. Do we really want that here? I think it's frankly a terrible idea unless you get rid of the 16th Amendment.
Yeah. Okay. So maybe just for those who don't really understand the VAT tax concept, that means taxing along the way, right? As it's value added each time. Isn't that more complicated? Can you explain how that would work in practice in the US? Like just
I mean, it technically can be more complicated for sure, but it's measuring the right thing. So in a sales tax, it's the retailer that gets hurt. Right? It's not the wholesaler. It's not the manufacturer. Nothing happens there, right? In a value-added tax, the price actually goes up a little bit every time. And so they're actually bearing some of the brunt of it. In the end, the consumer bears the brunt, right? But the reality is that the businesses that are on the way up in the supply chain, they bear the brunt of that tax insofar as it makes their goods more expensive, so they're less likely to be purchased, right? So that's the idea behind a value-added tax. It's a more accurate tax than a sales tax is really all it is. It's just a little nicer, I think, from a economic view than a sales tax. The sales tax, just the retailers bear the brunt of it.
Yeah, so, you know, you're right on the surface, right? But the end consumer always pays the tax, it seems like, on anything, right? Because everything becomes a pass-through entity.
It does.
And the price signals are sent down from the consumer back to the chain, the supply chain, right? And they tell everybody, hey, the consumer's not buying this, so we better do something to make them buy it, right?
Right. But then the question is, okay, so who's responsible for that, right? So yes, eventually it gets back to the manufacturer, but in the short term, it's not the manufacturer, right? It's the retailer. So it's Main Street. Main Street actually takes it in the shorts on, when you add another sales tax, because remember, almost every state has a sales tax. Yeah. So you're adding a national sales tax on top of a regular sales tax. The other thing is sales tax, people think it's so simple, but you still have to have all the exemptions and all the incentives that you have in the income tax, because are you really going to put a national sales tax on food? Are you going to put it on medical? Are you going to put it, and the value added tax actually bakes that in, right? They always have those exemptions. My biggest concern is you're actually adding another tax. You're not taking away a tax. You may, in the short run, be taking away the income tax, adding a sales tax. But in the long run, you're adding a sales tax to an income tax. Guaranteed. Yeah. That's the way politicians behave.
All right. So, Tom, how do the Trump plans or your speculation about the Trump plans affect real estate investors?
Well, from a positive standpoint, I think we're going to get bonus depreciation back, right? I think that's a big positive. That certainly had a big impact on the real estate industry in 2017 and till now, right? And I think it's going to be retroactive to the beginning of the year.
So bonus depreciation meaning what? When you do cost segregation?
Right. When you do a cost segregation, meaning that instead of having to take the cabinetry and the carpeting, all that kind of stuff, instead of having to depreciate that over 5 or 7 years, you get to take it in the year you purchase it. Okay. So I think at least for...
Or at least in the year you do the cost seg study.
Well, it's...
Because you could have purchased it 3 years ago and you can do the study
you do not get bonus depreciation if you do the cost seg study 3 years later. Okay. That's not how it works. Okay. You don't necessarily get bonus depreciation. It depends on how they word it, but right now that's not the case. Okay.
But you can start the clock on depreciating those other things when you do the study, right?
Right. So let's say, for example, you bought it 3 years ago and you should have depreciated 60% over the regular, because it was 5-year property, right? Then you get to catch up the 60%, but you don't get 100%. Whereas if you do it in the year you buy it, you get 100%. So it is better. It's better to do it the year you buy it. Okay. That's always
well,
better.
you're saying because it's already been depreciated. That's why.
No. I'm not saying that. I'm saying that bonus depreciation applies.
I mean, partially depreciated.
Right. That's why you're catching up what you should have taken had you done regular depreciation, but you do not get to catch up to 100%.
Okay.
Unless it was, longer than the life of the asset ago. Right.
Yeah.
So whereas like if contents of the house are $100,000 and I do a cost segregation the year I buy it, I'm going to get $100,000 deduction under full bonus depreciation. Okay. But if I do that cost segregation 3 years later, I'm probably going to catch up and I'm going to probably get 60%. Right. I'm not going to get 100%. And it's not just because it's already been depreciated. It's because I'm subject to the normal rules, not the bonus rules. The bonus rules apply when you do it, when you buy the property. So I think we're going to get it at least for the contents at things under 10 years. Whether we'll get bonus depreciation for leasehold improvements and other land improvements, things like that, I don't know. That's a negotiating point for Congress to say, well, how much money is it?
Okay.
But I think we're going to get that.
The holy grail of tax write-offs. I love depreciation, so that might be a benefit of the new Trump administration.
For sure.
What else for real estate investors?
It'll be interesting to see what happens with interest.
Yeah.
If they decide that they need a big pay for, the biggest pay for is to eliminate the home mortgage interest deduction. Mm-hmm. That's one of the big pay fors.
And when you say pay for, you mean revenue to the government?
It's the revenue to pay for the tax decreases,
in other words, we would lose a benefit.
Right. I think there's a potential for that because so many people rent now. And frankly, the interest deduction is baked into the price of the homes for the most part, that I think taking away is not a killer.
And so this applies to owner-occupied homeowners, not investors.
Not investors. Yeah. Investors are going to get their interest deduction regardless, right? But it does have an impact on investors because it affects pricing.
Well, because in other words, if that deduction goes away, pricing could soften. That would put downward pressure on real estate prices for homes that people buy, to owner occupy. But
it puts downward pressure on all single family homes, right?
Got it. But the important thing we need to dissect there is that typically rental properties are in a different price range than owner occupied properties, by and large, right? And so that's why it's not like a 1-for-1, but your point is well taken. Yeah.
So I think that's one thing that I would pay attention to. The state and local tax deduction actually goes the other way, right? Because property taxes, where you might be limited, like in a state like Texas, might be fully deductible for the homeowner again. So that has the opposite effect as eliminating the interest deduction.
So in other words, that is upward pressure on prices.
That's upward pressure.
We got one thing that's a downward pressure, the other thing that's an upward pressure. So maybe it evens out.
Yep, absolutely. I think otherwise, I don't think the rates are going to change at all, except for manufacturing and for like tips workers.
Tax rates.
I don't see a lot, actually. I actually think the deportations might have a bigger impact on the real estate market than anything, right? Just because all of a sudden you have 5 million fewer renters.
Well, so let's talk about that for a minute. So that's really a two-sided equation like everything, right? It means you instantly take that renter of like a low-end cheap apartment out because they're illegal, so they're not making much money and they've got a really cheap apartment that they're renting, right? So then you've got a vacancy as a landlord of these very low-income type apartments, okay? But by the same token, they also took a job away from an American. So now an American can do that job and they will get paid at higher wages. That's inflationary, right? It's less cost to the government overall. So there's a lot of cross currents in that. But the instant feel is that, hey, I got a vacancy, right?
Yeah.
So, yeah.
Yeah, for sure. And you know, I'm not sure that they took a job away because the job market's still pretty tight, right?
Hey, look, a lot of them are doing a construction job. Right. And so if you lose those, I mean, the average construction worker now is like 50 years old, Tom. It's insane. Mm-hmm. So if you lose these immigrants doing construction work, and a lot of them do that, okay, the cost of building a home is going to go way up.
Oh, yeah.
I mean, you know, nothing else can happen.
For sure. I mean, just, you know, I had my roof replaced. Yeah. And there wasn't one of them that spoke English.
Oh, of course not. Yeah.
Okay.
And you probably got a great deal. That roof's going to be a lot more.
They did a great job. I mean, they're great
Americans.
craftsmen, great workers. They did a great job. I have no complaints about what they did. Yeah. I'm going, okay, cost of roofs going to go up because if they're not there.
Oh, yeah. No, you're going to pay way more money for a bunch of white American people speaking English to do your roof next time around. Yeah.
Yeah, that's for sure. So I actually think that probably has a bigger impact on real estate than even maybe bigger.
So
than
that impact is upward pressure on prices.
Yeah,
right. Yeah, interesting.
So
okay.
I don't think we're going to see a lot of other stuff. I mean, do you? I don't hear a lot of changes on the real estate taxes. I think the solar may go away, so that's a real estate issue, really. Right. So I think the solar credits may completely go away. Yeah. And of course, that means that if you're putting solar on your apartment building, or you're becoming your own utility, basically private utility there, and you're doing that, or you're putting it on your rental homes, whatever. I think that is a severe risk.
Yeah, I think you're right. And you have long been a proponent of doing the solar deals because it's been a great tax benefit, right?
It's a great tax benefit. And if you live in the right place, I mean, depending on where the real estate is.
Oh, you're in Arizona. So
I'm in Arizona.
Yeah,
so
there.
So it's a really good deal in Arizona. Yeah. And, there are other Western states, in particular, Utah, California, that have a lot of sunshine. And if you got a lot of sunshine, it makes a lot of sense to use solar because, I mean, I will tell you, my utility bills are about a third after putting the solar on as they were before the solar in the summer. So it actually can have a big impact. And I actually am a big fan of solar energy. Yeah. I think it's a nice, clean energy, and we got it anyway. Why not use it?
Yeah. Well, nothing puts more energy on the earth than the sun. It's an amazing power source. We kind of got into this a little bit deeply here, but I want to back up and just ask you a different question. Sure. What do you think really the new Trump administration, combined with Congress that's on his side for at least 2 years, right? What do you think is going to happen? Like, what should our listeners and viewers be prepared for? What should they plan for? I don't think there's too much risk of getting audited anymore with his rhetoric, at least.
That's an interesting one. I actually would hope from an audit standpoint that they don't take the money away from technology. The IRS is woefully behind in technology, needs good technology. I don't think they need more auditors. I think they need better technology. Yeah. And with the technology, they could actually do automated audits, which is the way it should be. I mean, people should pay their accurate amount of tax, right? Whatever is accurate for them. I don't think anybody's disagreeing that. We should not have cheaters. Right. There's no need to cheat, as we've talked before, Jason, but there's no need to cheat. But 15% of the public regularly cheats. I mean, that's the statistics, right? And so that's a pretty big number.
And what's interesting about that, by the way, is regardless of whatever the tax scheme is at the time, the government collects about the same percentage of GDP no matter what. It's about 19%. It could be the tax rate, could be high, it could be low, it could be deductions. Well, people are only going to pay the government 19%. That's the end of it.
Steve Besson, our new Treasury Secretary, he said, we don't really have a revenue problem. We have an expenditure problem. And he's spot on. On that. It's an expenditure problem. It's not a revenue problem. I think getting a physical audit just went down substantially, for sure. Getting a technology audit is going to go up. Mm-hmm. So I think getting the notice in the mail is going to go up for sure.
But they're not going to come out and do a field audit, probably.
They're not going to do as many field audits. Probably with the large businesses, they'll continue to do that. And they might even do it with some of the wealthy taxpayers. Who knows? The problem is that just FYI, Jason, most of the cheating is not done by the rich. Most of the cheating is done by the middle class. So even percentage wise, it's higher in the middle class. It's the laundry service. It's the contractor. These are the people that are saying, I'll give you $10 discount if you pay me cash. These are the people cheating on the taxes. That's the most common cheat. And that's very clear in the data. But everybody who's ever called the IRS knows it's just terrible. They say they answer the phone in 15 minutes. I think what they're quantifying is that there'll actually be an artificial message come on within 15 minutes. There's no person in 15 minutes. I've never had that experience. It's hours, right? And so we do need people in customer service. We do need money in technology. I don't think we need more auditors. So that's one thing. But I think from the 2017 Act is basically going to be extended, because if it were not, people would see that as a tax increase. So there's no way Trump wants to come in, or Congress, the Republican Congress wants to give people a perceived tax increase. So I think the 2017 Act is going to be extended. Now, the question is, what about bonus depreciation? Okay, that's a big one. What about research and development expense? What about the qualified business income deduction? What about the state and local tax deduction? So there are some things that could change. So first of all, state and local tax deduction is going to go up. There's too much clout by the New York Republicans in Congress. They have too much clout. So because of that, they will raise that probably from 10,000 to 20,000. We're probably going to get bonus depreciation. I think, Jason, I think we're going to get 100% bonus depreciation back to the beginning of 2025. What I don't know is what will be included in bonus depreciation. I think it'll probably include real estate, but I'm not sure it'll include leasehold improvements, which is that 15-year property it's been including. So that might go away. So I think there are going to be some changes, and it may be temporary. It may be a 4 or 5 year extension of bonus depreciation. And then same with the research and development expensing. I think we're going to get that retroactive at least to 25 and maybe to 2022, because that's a big one. That was a huge mistake in the 2017 Act. That should never have been in there. It was a terrible idea in the first place. And the only reason they put it in was because they were playing smoke and mirrors games with the numbers, and they thought it would be reversed before it actually went into play. Right? That's why they did it. Well, it went into play, didn't get reversed. And here we are with people paying, I know people paying 80% tax rate because they've got so much research and development expense that they have to capitalize. So that's a big one. I think the qualified business income deduction, that's the 20% small business deduction. I think it's good. I think we're going to keep that. So I think that's safe. I was concerned, but there's a lot of pressure to keep that in place. The other thing that we're going to get is we're going to get a reduction in the tax rate for manufacturers.
That'll be the incentive to bring manufacturing back to the U.S.
It will be, and it probably won't be in a tax rate. It will probably be in what we used to have, which was called the DPAD, the Domestic Production Activities Deduction, and it basically effectively is it's an effective tax rate reduction. It's a deduction, but it ends up functioning like a tax rate reduction just for manufacturing. So it won't affect the rest of corporations. That would be, I don't think there's anybody who's, there's not enough willingness to do that. The 21% rate's here to stay, I think, for the regular corporation. And then I think, unfortunately, tips are going to be exempt. So
Treasury inflation protected.
Tips are going to be exempt.
Tips. You mean tips on services? Yeah, right.
Tips on services. It's a terrible idea. It's a horrible idea that
tell us about that. So Trump campaigned on that. I mean,
he did. It was a terrible idea. It was a terrible idea when it was suggested in the first place.
Why is it a terrible idea?
Because you're targeting a specific group of people and giving them some tax benefit. Why? Why are you targeting a specific group of?
I think the narrative is that these are lower income people and it would help them out.
But what about the other lower income people that don't get tips? I mean, why? I mean,
there's a lot of ways you can cheat on that. Like I was going to just tell my renters to lower the rent and pay me tips for the rest.
Well, I think they already have a definition in there that just applies. It's just going to apply to restaurant workers and basically hotel workers. That's who it's going to apply to.
Okay.
They've already got definitions there. It's going to apply. That they can limit the cheating, but it's probably going to happen. I mean, it'll probably be an income level that it's set at. You can't, if you make over such and such, it's not deductible. It probably won't apply to their Social Security taxes. It'll probably only apply to their income taxes. So they'll still have to report them.
Yeah.
Just won't be subject to income tax.
Okay. Tom, the one area you didn't mention yet that Trump has campaigned on a lot, and I saw his son speak on it, is crypto. Do you think there will be any big special incentives there? I mean, he wants to make America the crypto leader, right?
Well,
as with
think,
AI too, that's another.
actually, I think they can do a lot by regulation. I think that's actually something he can impact. And, he's got his crypto czar in there. And I do think they can impact that by taxation. How is crypto going to be taxed? I think just by definition, what is crypto? I think there are a lot of things they can do to make it easier to use crypto. I think we're going to see that in regulation, but I'm not sure what else you do to promote it other than to do it, Trump and Melania meme token, right?
Yeah, well, sure, of course. They've got that, but also, for all the Bitcoin people out there, I mean, Bitcoin's the only sort of legitimate cryptocurrency, if you ask me. I mean, there are some other purposes for some others, but really that's the core product. You can sell it and buy it back in 30 seconds and take a loss and then.
I suspect they'll fix that. That's actually
that's a loophole.
That's a loophole.
Yeah.
Okay. That frankly should go away.
Or at least if that same loophole applies there, it should apply to other assets like stocks, right?
Right. 31-day rule on stocks for a wash sale. So.
Right, exactly. Well, okay, what should people listening do with all of this? You covered a lot of ground there.
Well,
what is the action step people can take if they're watching or listening to this?
Well, first thing is to just do your tax planning now. I mean, we're going to have incentives. I don't think the income tax is going to go down to 10%. It's not going to be a flat tax rate. There are too many politicians that don't want to give up any power, right? And income tax is where they get the most power. So
how do they get the power through that?
Granting favors to their constituents, right? Lobbying. I mean, think about it. I mean, huge. You're in the real estate business. You're kidding? You have the biggest incentives there are from a tax standpoint. And if it was a flat tax rate, you wouldn't have those incentives.
Right. So basically, it's a tool they can use to further crony capitalism, unfortunately.
That is exactly right. And that's why I don't think it's going away, because I just think it's too big of a tool for politicians. I've never met a politician who wanted to give up any power. Yeah. So it's a lot of power. The power of taxation is probably the biggest power they've got. So I don't see that happening. So I'm just saying, so do your planning. I mean, I think you can you always have to look at the incentives. One of the incentives that probably is going away is some of the green energy incentives, right? Some of those will probably be pulled back. Yeah. So you'll lose those. So that means, boy, if you're putting solar on, put it on now. Yeah. Don't be waiting for that, because that's going to be clawed back. So that's one thing you can do. The other thing is I'd like your views on this, Jason. I keep hearing all this happy days are here again stuff. And I suspect we're going to be in a little rocky road before we're in a better road. I mean, Musk said that, right? Musk said, look, it's going to be hard before it's easy.
Yeah, Tom, that's interesting you say that. I've been saying the same thing. I was just interviewed on another show about an hour and a half ago. I said the exact same thing. My opinion is this. Trump's policies are, by and large, very good for the country. I like what he's doing. However, it's not going to be without some significant bumps in the road. I'll give you a couple examples, right? So say, for example, you deport a few million people, right? That's ultimately good for the country. A country cannot be a lawless, borderless thing. That doesn't even meet the definition of country, okay? Countries have borders. They should be respected. Each immigrant costs the country about $8,000 a year, right? In government benefits and subsidies and just drain, right? But initially, they benefit the economy, right? Because they consume, they hopefully produce, and they rent someone's apartment, their cheap apartment, right? And so they do all this stuff. And the long run is the inflation tax that the government has to keep printing money to pay, all its ridiculous overspending. That's going to be a problem, right? And a lot of those people are in the construction industry. And so when you look at housing, the cost of building is going to just get more expensive.
Well, same, and a lot of them are in agriculture.
Yeah, no question.
Right? So the cost of food is definitely going to go up.
Absolutely.
Then you have them in the services industries.
Right. Oh, yeah.
Right. And so that means that, it's not like hotels actually clean your room anyway anymore, but it's just going to make it harder.
No question about it. I mean, look, what they've been doing is a total scam. Over the past several decades, the government has been importing deflationary pressure by keeping the border open, right? And that's causing American wages to stagnate or decline. It's good for them because it makes the numbers look better. It makes inflation tamer than it otherwise would be with their reckless spending and money printing.
Agreed.
Yeah. So these things all have a lag effect to them, and they take some time.
Exactly. Well, and even think about I love that he's bringing manufacturing back, and I love the idea of a 15% manufacturing tax, but that didn't happen overnight. Yeah. That's like years and years. You look at the 21% tax rate, the worst thing that the Democrats ever did from a tax standpoint in the last 20 years is immediately after the 21% was passed, they started saying we need to repeal it. That actually put a hold on a lot of manufacturers moving. They go, wait. So you mean if we get a Democratic president, which we could have, because it was so close, right? Then that means we could lose that 21% tax. Well, we don't want to go build a manufacturing plant that takes 5 years if we're going to be back in a 35% tax rate. So that was horrible. And so now, it helps a lot that it's pretty settled. I don't think we're going to lose that 21% rate, and that 15% rate will really help. It'll actually make us a tax haven. It'll put us on par with Ireland, right?
Which would be huge. I mean, the Celtic Tiger.
It's a lag. Right. And so here you've got, you're losing workers, plus you're firing a lot of the government workforce, which is more people that don't have money, right? And so I think in the short run, I think it puts a lot of pressure on the economy. And I think it's going to be a tough couple of years. I think, you don't know how fast it turns. When Reagan came in, he had the same issue, right? He had a high inflation and a stagnant economy, which I think we've got right now, a stagnant economy. Yep. And so he did the hard things, and it turned.
Well, he and Paul Volcker, but yes.
Yeah, he and Paul Volcker, right? But they did it together, and they brought it back, but it took a few years, right? And we had a couple of bad years. The first few years of the 80s were not happy times are here again. Right. So I think that's where people are going to get concerned, and where, frankly, the Republicans might lose their majorities in 2 years.
Yeah, I know. If you want to get fit, you got to work out. If you want to get well, sometimes you got to take some really disgusting medicine, right? Or, we have buried ourselves in a government that is way too large, way too irresponsible. Everybody's looking at their own term. They don't care about the future. And to fix that is not going to be easy.
That's right.
Okay. But some of the stuff you said about, like, take agriculture, for example, or cleaning service, or these lower paying menial jobs, right? I mean, it is so ridiculously racist of these Democrats to say that we've got to have these people come in to pick strawberries. Guess what? We had strawberries in the 50s. Okay, like, people picked fruit and ate it. Like, all of this stuff existed before. Americans will do the job, just pay them a fair wage.
Well, the other part of it is if labor's too expensive, you get technology.
Yeah, right. You force technological.
You force technology. Yeah, right. And so why not force technology?
Yeah. Absolutely. So, the businesses, the entrepreneurs will always figure it out, okay? Yep. But these ideas that you've got to have all of this immigration to do these jobs that were all done before, these jobs were done way before when we controlled our borders. And when I go around the world, I've been to 99 countries now, almost 100, I know, right on the verge.
One more.
It's amazing. You see, like, you go to Australia, you go to European countries, you see, white people cleaning rooms in the hotel, right? They will do the job. They just got to be paid a reasonable wage, okay? It's just so racist for Democrats to say that. It's ridiculous. But Tom, the other part is the tariffs, right? And you alluded to that in the beginning. That's the other bump in the road that could be pretty harsh. And, it depends what countries are tariffed, how much. But talk to us more about the tariff issue. Let's go into that a little bit.
You want to talk about a complicated situation, talk about tariffs, because it's like, a car that's made in the U.S. crosses the Canadian and the Mexican border like 9 times.
Oh, yeah. The supply chains are insane nowadays.
Right. I mean, it's not like...
But isn't that the problem with the VAT? The complexity of that, right? The value-added tax?
Yeah, I mean, I'm just saying it's hard to change overnight. That's what I'm saying. It's like, okay, this takes some time. This is difficult. I don't think the tariffs are nearly as bad as people think they are, frankly. For one thing, there's a lot of different people who pay the tariffs. Some of it actually is paid by the person selling, right? And the reason is because they want the U.S. market. Right. So it puts downward pressure on the prices. There's a lot of dynamic stuff going on there. And to just say, well, wait a minute, it's just going to rate, if you put a 10% tariff or 25% tariff on it, raises prices for 25%, that's false. Okay. Now, will it raise prices? Something? Yes.
Yeah. So in other words, wait, let's just unpack what you're saying. I want people to understand that. So the importer or exporter, I should say, of the product coming into the U.S., if they know they're facing a 25% tariff, that's going to put downward pressure on their prices because they want their prices to be competitive in the U.S. market. Right. So the ultimate end amount the consumer in the US might pay in that example is maybe 15%, because they figure out a way to produce more efficiently and do it better in their country. So they take maybe a 10% hit, and then the consumer in the US takes a 15% hit in that example, right? So that does put inflationary pressure in the US, but it also makes the exporter do a tighter, better, leaner job in production.
Yeah, for sure. It's just not one way.
Yeah, right. It's not one way. But it sounds like you are anti-tariff. Would that be a fair statement?
No, I'm not.
Oh.
Well, it depends on the tariff and it depends on the situation. I think blanket tariffs are probably a bad idea. That historically they've never worked. Okay, yeah. But targeted tariffs. I mean, look. Even something as controversial as we're going to invade Greenland and Panama, right? I'm going, wait a minute, though. Look at what I
don't think we're going to invade Greenland. That's like a business deal, but the Panama might be an invasion.
Well, but let's look at this. Both Panama and Denmark and Greenland, they've been soliciting Trump, say, hey, let's sit down and figure out what we can do here.
So Panama doesn't sound like they're saying that, but Greenland
Panama is absolutely saying that. Panama is saying we don't want the Chinese controlling the Panama Canal. We're going to work with you. I mean, Panama has a good relationship with the U.S., right? I mean, this is not been an adverse relationship.
I know we do, but the rhetoric I've been reading is not that, but you're reading different stuff than I am about Panama. I know Denmark is willing to sit down and discuss it as far as the.
But my point is I think that the threat of tariff, now you can't issue a threat without being willing to go through on it. And I don't think Trump's ever issued empty threat.
Yep,
right?
I agree.
And I think people are finding that out already.
Yeah.
And
they know he means it.
A lot of federal workers finding that out right now. Yeah. No empty threats. Actually, the most interesting part of this first round of tariffs is that China is only 10%. So what do you make of that? Because I'm going, originally he said China would be 60%.
Yeah, I know.
Now he's like pulled back to 10. It's almost like he's courting China.
Yeah. I don't know. Who knows what goes on behind doors that I don't have access to. But, maybe he just wants to ramp it up slowly. Maybe he's just showing them, look, we're serious. I really don't know.
Or maybe what he's saying is, look, President Xi, let's talk about this, because he doesn't want to just say, hey, to the second most powerful country in the world,
right?
Right? Forget you, right? I mean, I think actually it's a pretty interesting strategic move. Tariffs overall, again, I think as a negotiating tool, I don't certainly have an issue with them. And I think as a targeted, I don't particularly have an issue with them. So you really just have to look at what are all the potential consequences. And I don't think they're, Trump said it's his favorite word in the dictionary is tariff. I can't say that it's my favorite word, but I also don't hate them. So I'm like, okay, let's be thoughtful. Let's be strategic about them.
Yeah, I agree with you. And I think that the sort of the free traders have this knee-jerk reaction to tariffs are a bad idea, right? I don't think they're all bad. And I do believe that it's like that biblical principle of being equally yoked, and the problem is our trading partners are not equally yoked.
Right.
Because if you can produce stuff in China with, no minimum wage laws, no regulation, they don't have OSHA, those businesses can outcompete the US. It's just not a fair deal, right? And so that's one aspect of it. And, I had Pat Buchanan on the show before, and he was saying, and I couldn't agree more, that look, the U.S. has something to offer in this deal. We're the biggest consumer market in the world, and we need to charge admission to our consumer market.
Exactly.
It's like saying,
I agree.
If you own a shopping center, you're not just going to let anybody sell in your shopping center. You're going to charge them rent to sell in your shopping center, right?
Exactly. Amazon. I mean, look at Amazon. Biggest marketplace in the world is Amazon, right? And
they charge all those merchants a big fee.
You and I both have products on Amazon, right? So they charge a lot of money.
Yeah.
Be on Amazon. They take a big piece of that deal. Right. So, I agree. The idea of charging access to the economy, charging access to the consumers.
It's a fair deal.
It shouldn't be free. Yeah. It shouldn't be free.
No, I know. And, these companies, these multinational companies are just like raping the system. It's just pathetic what they do. I mean, that's actually another question I didn't ask you. When Trump's tax plan went through on his first term, we saw a lot of this money get repatriated to the U.S. And it just bugs the hell out of me that these big companies like Apple, for example, if I ask you, where's Apple? You'll say Cupertino, right? Silicon Valley, okay? And you'd be right. They have a $5 billion UFO, beautiful building and campus there. But the reality is, where's Apple tax-wise? Well, they're in like Ireland and the Netherlands, and they're doing, I think that strategy is called like the double Irish twist that they use, right? That's disgusting that they can get away with that.
Well, and that is just playing country against country, country law against country law. The EU went after Apple for that. I mean, can you force Cayman Islands to charge tax? No, you can't force Cayman Islands to charge tax.
Well, that's what Janet Yellen wanted to do with this minimum tax regime, right?
Well, so don't get me started.
Yeah, that was not a good idea.
Fortunately, that's dead for at least 4 years.
Yeah.
Because there's no way that's going to get through the Trump administration. Yeah. That was a horrible idea for me.
I agree.
It was a never benefit to any American company ever. Yeah. It was meant to benefit Europe. That's who it benefits. It doesn't benefit the U.S. And I think that the threat of a tariff to offset, if they do impose something like that, I think that's a fair quid pro quo, right? That's fair. Hey, you can't go do this on our company when, you're getting a free ride, right, coming into the U.S. So I think that's totally fair. The whole trade is fascinating, but I do think that bringing manufacturing tax down to that 15% rate, we should make that permanent. I thought that in the first 2017, right, Trump's original proposal was 15% for all corporations. I'm going, so 21% puts us the same as everybody else. 15% makes us a tax haven. Mm-hmm. Why wouldn't you want the U.S. to be a tax haven?
Absolutely.
When you think of all the other taxes? Because, right, so let's say that Amazon pays a 15% tax rate, but all the employees are paying 30, 40% tax rates, right? Plus they're paying Social Security taxes, blah, blah, blah. And so you've got all these other taxes that are actually much bigger than the corporate income tax. And the corporate income tax, by the way, corporations are not people, right? So people are paying those taxes, either consumer or investor
entity. It's always a pass-through.
Somebody's paying that tax, and it's not the quote unquote big bad corporation, right? Some individuals end up paying tax, and it goes in your pension plans, right? You pay it through your pension plan. Yeah. So it doesn't matter, your 401k. Actually, I think that's the most important part of the current policy is this: let's make it attractive to manufacture in the U.S. I mean, that's another thing about tariffs, by the way, is it does make it more attractive to manufacture in the U.S. People buy Chinese goods indiscriminately, right? I mean, you go to the grocery store and you pick it up and look at the back, it's China. It's from China. But if that's pricier, then you go, well, wait a minute.
Yeah. Maybe I'll buy the American thing.
So I really want to buy it. Right. And so I think it actually puts pressure on, and that actually brings the prices down from China as well, right? Yeah. It's the consumers, vote with your pocketbook.
Yeah. No, the playing field is very unlevel, and the tariffs can be used strategically as a tool to level the playing
Agreed.
field. And 100%. That's the right thing to do, in my opinion. So I've got an exciting announcement for everybody. Tom Wheelwright is a very dynamic speaker on a live stage. He's got a couple of flip charts and he's just moving around, and people learn so much from you, Tom, when you're on stage. You've spoken at several of our events before, and you are going to be speaking at Empowered Investor Live. That's April in Irvine, California. We've got a beautiful resort hotel, freshly remodeled, and this is going to be a great time. It's going to be great to have you there, Tom. And any comments about the event or anything about any things you wanted to say that I didn't ask you today?
Yeah, first of all, it'll be great to be at your event. And by April, we'll actually know a little more about tariffs. Right. We'll know a little bit more about the immigration. We'll know a little bit more about taxes. I actually think the most important thing you can do this year is to stay up to date on what's going on, because it's absolutely going to have an impact on every single person who lives in the United States.
Yeah, absolutely. And Tom, your insights are just so valuable. So I can't wait to see you live in April at Empowered Investor Live. Go to empoweredinvestorlive.com to register for that. And Tom, go ahead and give out your website as well.
Go to tfwadvisors.us, and that is our website, our tax-free wealth advisors.
Good stuff. Tom Wheelwright, thanks so much for joining us today.
Thank you, Jason.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please
please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.